Hey there, fellow investors. Are you ready to dive into the exciting world of small cap stocks? Well, you're in for a treat because today, we're going to unlock the secrets and strategies that will turn you into a small cap investing pro. Whether you're a beginner or an experienced investor looking to expand your portfolio, this is the perfect place to start. So, get ready to uncover the secrets of small cap investing, unlock your potential for extraordinary returns, and embark on an exciting journey to financial success. By the end of this video, you'll have the knowledge and confidence to start investing in small cap stocks like a pro. Without further ado, let's dive into the captivating world of small cap stocks for beginners. Small cap stocks are shares of companies with total market capitalization in the range of about $300 million to $2 billion. Small cap companies have the potential for high rates of growth, making them appealing investments, though their stocks may experience more volatility and pose higher risks to investors. Why is market capitalization important? Market capitalization measures a publicly traded company's total market value. You can calculate market cap by multiplying a company's current stock price by the total number of shares outstanding. Market cap data is generally available for publicly traded companies on any website that provides real-time stock information. Market cap is generally used to divide stocks into three categories based on size: large, mid, and small caps. A company's size in terms of market capitalization doesn't tell its whole story, but market cap information is useful for a variety of key decisions. Market capitalization data is helpful for investors when they are evaluating the growth and risk prospects of stocks to include in their portfolios. Grouping companies of similar sizes together allows you to better compare their stocks and performance. Index providers also use market cap to determine which companies should be included in benchmarks. These composition decisions directly impact which stocks are included in any index funds you own. Actively managed funds rely on market cap designations as well. Fund managers may craft an investment strategy to focus on particular segments of stocks based on their market cap. And in the business world, companies could look for possible acquisition opportunities within small cap competitors. What are small cap stocks? Small cap stocks are the most numerous companies in the market. In fact, there are more small cap stocks than large and mid cap stocks combined. That's thanks to the fairly broad range of market capitalizations included in the small cap stock designation. Anything from about $300 million to $2 billion can be considered a small cap stock. Because of their size, small cap stocks have different risks and rewards for investors than their larger counterparts. Small caps include the next hot company everyone will be talking about, along with companies on the brink of bankruptcy, and ones that are prime targets for an acquisition. As a result, small cap stocks can experience larger than average volatility, which is just another way to refer to rapid gains and losses. Over long periods of time, investors may be rewarded if they stomach the ups and downs along the way. However, in the short term, some small cap stocks may experience wild swings and can be illiquid, meaning they don't trade as frequently and can be difficult to sell for cash. In the past 20 years, the S&P Small Cap 600 Index, a leading benchmark for small cap stocks, has outperformed its related indexes for large and mid caps on an average annualized basis, according to figures from S&P Dow Jones Indices. During that period, the S&P's benchmark small cap index returned an average of 8.3% annually, compared to 8% and 6.3% from its mid and large cap counterparts, respectively. The following indexes are often used as benchmarks for the U.S. small cap universe. Both include companies in a variety of industries. Russell 2000 Index. The Russell 2000 Index includes approximately 2,000 of the smallest U.S. stocks. Companies had a median market cap of $940 million as of November 2022. S&P Small Cap 600 Index. The S&P Small Cap 600 Index tracks the performance of 600 small cap companies, with a median market cap of approximately $1.4 billion as of November 2022. Small cap versus mid cap stocks. Mid cap stocks are those whose market caps range from $2 to $10 billion. Beyond size, there are other important differences between small and mid cap stocks. Stage in the business life cycle. Companies in the mid cap space occupy a sweet spot. They may be more established in their respective industry with a more robust lineup of products or services than small caps, but they aren't yet the big household names everyone knows. Geography. Both small and mid-cap companies derive a majority of sales within their domestic economy. However, Companies in the mid-cap space are more likely to begin operating outside their home country. Growth. Both mid and small-cap companies have big growth potential, depending on their industry. Mid-caps are more likely than small caps to be involved in a merger or acquisition, which can propel their growth prospects. Risk. As a group, mid-caps are considered less risky than small caps because of their more established business models. Volatility. Because of their lower relative risk, mid-cap stocks also are less volatile as a group than small caps. The two primary benchmark indexes for mid-cap stocks are S&P Midcap 400 Index. This benchmark tracks the performance of 400 mid-sized U.S. companies with a median market cap of nearly $5.2 billion as of November 2022. Russell Midcap Index. This index tracks a larger universe of approximately 800 mid-cap companies with a median market cap around $8.8 billion as of November 2022. Small cap versus large cap stocks. There are even bigger differences between small and large cap stocks. Not only are small caps a fraction of the size of large caps, which have market caps in excess of $10 billion, but the business and investing prospects are also quite different. Stage in the business life cycle. Large cap companies are well established in their industry, with a broad and diversified business that includes a variety of products and services. These companies may even dabble in different industries. Geography. Large cap companies operate globally, and only 62% of their sales come from the U.S. compared with 79% for small cap companies, according to figures from 2019 compiled by S&P Dow Jones Indices. If there's a slowdown in the U.S., small cap stocks are more likely to take a hit. Growth. By the time companies become large caps, the biggest gains in their history may already be over. By this point, however, they are more likely to begin acquiring other companies to expand their businesses, including those in the small cap space. Risk. Because their businesses are more established, with a diverse lineup of businesses operating in multiple countries, investing in large cap stocks is less risky than small caps that don't share those same attributes. Volatility. While any individual stock price can jump around a lot, large cap stocks are less likely than small caps to experience wild swings. There are other gauges for tracking the U.S. large cap market, but far and away the most commonly cited one is S&P 500 Index. The S&P 500 tracks the performance of the 500 largest publicly traded companies in the U.S. as of November 2022. These companies had a median market cap of $29 billion. Small cap stocks and asset allocation. Even though small cap stocks can be riskier, investors may still choose to invest in them to benefit from the higher potential gains. What's more, these companies aren't so affected by slowdowns in other regions of the world because a majority of their sales come from the U.S., so investing in small cap stocks is a way to benefit from a strong U.S. economy. The amount of money that you allocate to small caps versus mid or large caps ultimately comes down to your risk tolerance and investment goals. A conservative investment strategy might have a 10% allocation to small cap stocks, compared with 20% for an aggressive strategy, according to recommended models from the American Association of Individual Investors. While you may choose a different allocation than these guidelines, make sure you understand the potential trade-offs of doing so. Ways to invest in small cap stocks. You can invest in small cap stocks by purchasing shares through your preferred brokerage or investment account. Keep in mind that there is less information available about small cap companies, namely analyst research, compared with their larger counterparts. Small cap companies also face greater business uncertainty. As a result, researching which small cap stocks you want to buy can be time-consuming, and introducing small cap stocks can add unforeseen risks to your portfolio. Instead, many investors choose to invest in small cap companies by buying mutual funds or exchange-traded funds, ETFs, that track the broad small cap indexes, specific industries within them, or characteristics like growth versus value. Vanguard manages 7 mutual funds and ETFs that were gold-rated by Morningstar as of mid-2020. These include funds that focus on value, growth, and a blended strategy. The Morningstar picks include Vanguard Small Cap Index, Wasatch Small Cap Growth, Boston Partners Small Cap Value. There are more than 60 ETFs that specifically track U.S. small cap stocks, according to ETF.com. The 3 largest funds by assets are Vanguard Small Cap Value ETF, Vanguard Small Cap Growth ETF, Schwab U.S. Small Cap ETF, As with any investments, it's important to do your research before selecting any individual stocks or funds for your portfolio. Consider meeting with a financial advisor to discuss any new additions to your investment strategy. Thank you so much for joining me today on this exhilarating journey into the world of small cap stocks. Remember, investing is a continuous learning process, so stay curious and never stop expanding your knowledge. If you found this video helpful, don't forget to give it a thumbs up and subscribe to our channel for more exciting investment tips and strategies. And as always, feel free to leave any questions or comments down below. I love hearing from you. Until next time, happy investing, and may your small cap adventures lead to big time profits. Take care.